Yo, what's up everyone? This is going to be an impromptu trade recap video. I took two trades on two different days to start the week. Really good analysis, simple and clean. I want to break down what I saw, how I saw it, and I have a live recording of basically the tape to show you really what made me pull the trigger and to understand the auction process, backing the setup, and the context surrounding it. Before we get into the trades, I recommend everyone to follow me on Instagram at Entrepreneurship. I will post a link to this in the description below. I definitely recommend to follow it. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. Link is in the description below at Entrepreneurship. But now, let's get right into this recap. Okay, so first thing I want to get into is basically it was on the S&P 500. I'm recording this on Tuesday, April 12th, and I want to pull up the pre-market plan here just for some context because sometimes there's setups that you could plan out for, but either sometimes the market doesn't work out according to your plan, or you have to see things develop in real time, and then you could come up with a high quality setup as we get new information and as the market develops. So essentially from the pre-market plan, overnight we bounced off of this 43.88 demand zone. As you can see over here, had a clean rally, and then the CPI data came out at 8:30 Eastern, and we had a very strong rally invalidating this 4488 or 4448 supply, and we also had supply a little bit lower from yesterday's action that we invalidated. Now this is a little different because we've been seeing supply zones be very reliable and demand zones be not as reliable. So today the tides kind of changed and we saw a little bit of a different reaction, which is going to bring a different result. So the main piece of information that I wanted to see today on Tuesday, April 12th, was how we react at the 45 supply, which is this line up here, and then the 4461 supply imbalance up here from this pink box, which we rejected perfectly. Any strong buying, like we're seeing at the time of this post, before the market even opened up, we looked like this. Didn't even hit the top supply yet. We were basically near the highs, and the market was very strong moving up. So I want to see how we react at supply, and I was open to playing longs if we could get above this 4461 supply zone, or if we could create demand at 44.45. I post these pre-market plans every single day in my Discord. And then we had a bearish scenario, and then the market could move lower into demand, which is actually what worked out perfectly. But one thing I want to show you guys is a live recording of Bookmap, basically showing you the level 2 and time and sales and what I saw to pull this trigger. Now, I played this to the long side. I wasn't really a fan of any setup as the market opened up. You're going to see when I talk about yesterday's setup on Monday, how it looked extremely clear and we had a high quality setup. Yet today when the market opened up, there really wasn't anything of quality, and I was even posting in the intraday commentary tab a minute after the market opened up that I have nothing of quality just yet, unlike yesterday. And it wasn't until 9:46 that we saw a very large hidden seller at 44.50, and this was the main reason for this trade. So let me pull up QuickTime here. I got a live recording of Bookmap, and what this is going to show you is visually a heat map of the level 2 and a live recording of the time and sales. Essentially, large green bubbles are aggressive market buy orders, red bubbles are aggressive sell orders, and the lines in the background are liquidity. These are passive orders. Above price are passive sellers, and the thicker and the darker red color means there's more liquidity at that level. So what we're going to see here, and I want to show you all what it looks like on the chart, is since we're above this supply, it becomes invalid. We had a very key hidden seller at 4450. So at the point of this, the market was coming up, and I didn't see anything of interest. We weren't at supply, we weren't at demand, and there was nothing really to this. We were chopping in what I call no man's land. We weren't in an imbalance. We didn't have a key level, and there was nothing of interest. And I said I saw nothing of quality yet. Now, it wasn't until about 9:44, 9:45 that reading the tape, why it's so important, understanding price and volume analysis, that we spotted a hidden seller at 4450. Now, what I mean by this is I'm going to play this recording. It's a live video of what I saw. But what you're going to see here is you're not going to see large passive sellers at 4450. What you're going to see is the market coming up to 4450, and there is very large aggressive buy orders coming through. By the end of this clip, there's 9,000 lots that hit the offer to buy aggressively at 4450, yet price could not get above 4450, and we did not see a large passive seller at that level. What happens here is that seller kept reloading his position, absorbing all the aggressive buy orders, and when he let go and when the pressure was on him, the market spiked, and this is when I played the market to the long side, targeting the supply zone at 4461. So watch what happens here. As we come into 4450, look, another aggressive market buy order comes through, and there really isn't large passive selling that is going to outweigh those aggressive orders coming into the market. Now I'm going to pause it here, and I want you to look at the volume profile to the right. There's about 3,100 lots hit the offer at 4450 compared to about 500 which hit the bid. Not that big of a deal, but keep in mind the 3,100 lot number, because as the market keeps testing it, look at all the buy liquidity that's getting absorbed. That was just 3,100, and about a second later, we're at 3,700, yet there isn't 600 lots or 700 lots passively selling on the offer. I'm going to hit play again. Now we're at 4,000 buy orders at 4450, 4,200, 4,500. Look at all this aggressive buying, and there isn't that much passive selling at 4450 on the offer to really not let price come above it. So there definitely is a hidden seller at this point, absorbing all the buy orders at this level. And now we're at 4,600. Look, the level just keeps increasing. Now 5,000 lots, 5,500 lots, and there really isn't heavy size passively selling on the offer. Now we're at 5,800. Some more aggressive buying coming through. Look at the volume down here. Now 6,200 lots. Look at this. All that aggressive buying, yet the market could not come up. This is a hidden seller. This is exactly what I talk about in the tape reading section of the A to Z course. This is exactly what you want to see when you're reading the tape. Now, you don't even need Bookmap. You could look at just the normal, time and sales and level 2 on any other platform. That will suffice. But I think Bookmap is good because you could visually now go back and I could show you all this example. So now we're at 6,700 lots, 7,000 lots. And look, there's just a seller reloading up there. Watch what happens. Now 8,000 lots, watch what happens when we break. So there's two things you could do here. You can get in immediately after we break. Look, 8,000 lots, 9,000 lots right now. And watch, this is when we break right here. So there's a couple things you could do. This is when the market looked like this right here. You could kind of see it on a 1 minute chart. You could see 4450 act as resistance, 4 or 5 different times on a 1 minute chart. But reading the tape is going to tell you a completely different story. So what you could do here is you could get in when we break above 4450. However, the problem with that is you have to manage your risk properly, because what happens, I want to say all the time, but we break above that level and it looks to be a fake out. We come above briefly, a bunch of longs get in, and then the market dips down, collects more buy orders as retail is selling to the downside, thinking it's a fake out, and someone's on the other side buying from those sell orders, and then they take us back up and rip. Another way to play it possibly is to just get in long and manage your risk properly when we do break above, and get your risk or your stop loss to an area that it just makes sense to exit. So we break above, there's a passive buyer that just got filled as we broke above that level. Now we got almost 10,000 lots at 4450. As soon as I see this, I'm in long. No questions asked. I posted my fills in the Discord. I played the SPY 4450 or 445 calls. And I'm in right now. Stop loss for this trade really wasn't too far away. It was about 4448. It was one of these trades where it has to work out right away, or else my thesis and my analysis is incorrect. And look, now that we have a large seller, over 10K lots or 9,000 lots, once he's underwater, he's going to have to buy to cover, and that him buying to cover is just going to fuel up another leg higher. And if buyers who are aggressively showing interest in the market prior to that break. If they continue to show aggression above that level, then the market is going to continue up. Now, at this point, really what I was focusing on was posting the intraday commentary tab here. Massive hidden seller at 4450. Everyone see what's going on here. Posted that update. Over 9,000 contracts. And I said, this is an important reference area moving forward. There's not much stopping a rally back into 4461. So the thesis for this trade was I looked at the tape to confirm that, yeah, there was a seller and yeah, we had buyers in the market. And I used supply and demand saying once we get above this 4450 area, I'm going to mark a line right here. There's really nothing stopping us from rallying about 12 points into the supply zone. We didn't have any other supply. We didn't have any other resistance. And there was really a white space from above 4450 with aggressive buying to supply that we could take a high quality long position that really there was nothing stopping us. So I'm going to hit play on the replay. And look, just aggressive buying coming through. Here's that 445 level. We could see it over there. There's some passive buyers on the bid. Nothing really significant. Then the market pulls back. No reason to really worry. There's no aggressive selling. It's just normal distribution and normal transactions going on. And then the buying starts coming in. Buying volume builds. We're at 4459 at this point. And at 952, when we get into 4461, as I said from that supply target, I got out my full position. And it was a quick 30 or 40 cent gain on the contracts. The fills are in the Discord, the entries and exits. If you all remember, go back and see them. Then we came into this supply zone, and I'm all out my long position. I don't really want to re-enter. I didn't scale out, 50% of my trade. I just got all out. It was a quick and easy scalp, and I'm going to pause that just off of simple analysis. And then right after that, there was really nothing significant. But one thing I do want to note here is this is what it looked like on a candle chart. Clean break above, clean rally into that supply zone. And it looked like the market was going to rip, but we came into that supply zone, tested it twice, and failed. Once we got back below that 4450 area, it was game over, and all day the market found absolutely no buyers, sold off, making lower lows, lower highs, and rallies got sold down into. And by end of day, we closed at that demand zone that I mentioned in the pre-market plan. It was an all-day sell-off from that supply zone. Now, in hindsight, we broke above pre-market highs, failed to stay above the high, and this was a good short entry. But since I was in long and I was using supply to take profit off of a long position, I didn't look to exit my long and then immediately get back into a new short position. But I know a bunch of members in the Discord took this to the downside and played puts at supply and had a clean all-day sell-off, almost over 100 points from this supply zone. Very, very clean move. I also want to throw in Monday's action, April 11th. I took another nice setup. It wasn't as clean as the setup on Tuesday, but there's some important lessons from Monday's action. So what I was watching for from the pre-market plan, again, this is on the S&P 500. It's my bread and butter. It's my favorite instrument to trade. Was we were watching for scenario number one, a strong break below 4445, which is this yellow line over here, confirmed by the tape. I'm going to be watching to play a quick short scalp targeting 4433 demand, which is this green box over here, which is I think is key. If selling continues to be heavy, the next target is the 4400 and that 4388 demand that we bounced at on Tuesday. So that was the scenario we were watching, a strong aggressive break below 4445. Now, as the market opened up, there was a clean break below this, and I played puts, I think the 440 puts at right here when the market looked like this at 939. So the market aggressively sold off. I guess we could say I had a late entry, and my stop loss for this trade was back above 4457, which was, I wanted to give it a little breathing room above these wicks. Now, my reward wasn't the best. It was about a little over a 1-to-1 risk to reward, but I considered this a high quality setup because what we were watching for was, pull up the scenarios here. ES below 4445 and strong names to sell off and weak names to continue to sell off. So this is kind of where market context comes into play. I was in SPY puts at this point, stop loss above the high, targeting demand. Not the best risk to reward, and if it's not a high quality setup, I don't recommend taking risk to rewards that are 1-to-1. You want to really shoot for 3-to-1, maybe even 2-to-1 if it's a semi-decent setup. So I'm in SPY puts at this point, and then the market starts moving down, and then immediately we get a bounce. Now, I viewed this as very bullish because we broke below our level and immediately found buyers. They were responsive, and they took the market back up above that level. Now, at this point, if I had a bad stop loss, let's just say 4450 or like 4452, based on a random number and not really based on where my analysis is wrong, then yeah, I would have stopped out of this trade. And to be honest, I was very close to stopping out of this position because it looked bullish. I thought the market was going to reverse, but I must maintain my plan that I plan out before I even put the trade on. So then the market's consolidating like this for about an hour or about 45 minutes after that, and we're really doing nothing. We're in a tight range. We're holding above 4445 every time we bounce at it, or every time we test it, we move up. So I'm getting not frustrated, but I'm getting less inclined to think that the market is going to move lower. And then I posted an update saying I want to see ES below 4445 and the strong names such as Amazon, Nvidia, Facebook, and Tesla. If we pull these ones up, Nvidia, keep in mind what they were doing in the first, let's just call it half hour, the market open up. So in the first half hour, these names were relatively stronger. Nvidia was an uptrend, higher highs, higher lows. Names like Tesla yesterday were rallying to the upside. Amazon was rallying to the upside. It was moving up. Yet we had other major market leading names such as Apple that was selling off, and we had names like Microsoft, which was also selling off. So we had names like Apple and Microsoft, which were relatively weak names. And we had relatively stronger names, which were continuing to rally. So what I wanted to see happen at the same time, this is where market context comes into the picture, was these names that were relatively weak to continue to sell off and names that were relatively stronger to roll over. And if we could get that at the same time as the S&P 500, I'll pull this up here, started to move lower below that 4445 area, then yeah, this is going to give me more conviction and this is going to be a solid setup. Eventually we broke below. Those relatively stronger names started to break down and we got a clean break into demand, and I exited my full position. I exited 80% of my position as soon as we hit demand, and I kept 20% runners because this bounce at demand was extremely weak. It was not met with buying, and we failed to bounce out of it. Those other equities were very weak as well, and then we just consolidated in this demand. Before power hour, we had a very clean end-of-day sell-off. So the point I want to make here is follow your plan. Don't exit a trade prematurely because you don't like how it looks or you're not feeling it anymore. Stick to the plan that you created before you entered that position and understand market context. It plays a big picture right now in these conditions in the current market environment, and it's very powerful. And understanding how to read price and volume is a skill that could really, make you, if you're struggling in trading, it could really push you forward to be profitable. Understanding price and volume, combine it with supply and demand, it's extremely, extremely powerful, especially with reading the tape, as a majority of my trades have been with some type of tape reading analysis recently. And I would say maybe 2-3 months ago, I added a full tape reading section to the A to Z course. So I'm going to end the video on that note. Drop a like, comment if you have any questions. And if you want to check out the links in the description below, I offer a very in-depth and educational course that comes with access to the Discord at no extra charge. I will be raising the prices soon, and big changes will be coming in the very near future. So peace out.